Good morning, everyone. My name is Hemant Ayappan, and I'm a trader in the markets. I've been trading and investing in the market since 2009. The reason for making a video of momentum trading is there are very few out there. Secondly, I hear of many of young traders, going to expensive courses to learn momentum trading and not gaining much. Also, many of my friends keep asking me what is my method and things like that. So I thought I would keep put everything up in one place, so it becomes an easy reference for anyone. Now, this is a kind of a neutral video because I'm not here to make money from training here. So I'm just putting up my methods and systems and process. So any one of you, probably you all can learn something from that. This is trading is a very competitive field. Any place, any field where the objective is to make money will be very, very competitive. And trading is extremely competitive. It's very difficult to make money. In fact, there's a rule in trading that only 95% of people actually lose money. Only 5% make money. So it's not easy. I mean, just because you see some of my methodology doesn't mean that you can go out and make money in trading. Uh, the methods have to suit you. You have to learn. You have to make your own processes. You will create your own systems, and with experience, you will slowly improve and finally start making money. Uh, the trading journey, I just wanted to give a background about myself. I started in June 2009, and in the first decade of my trading, my portfolio is up about 8 times, which is 23% return per annum. These are not exceptional returns. This is a kind of a reasonable return. General returns expectation for most investors is in the region of 20 to 25%. So this falls there. There are traders I've heard of who are making 50% plus, and some of the great traders in, like for example, in the U.S. trading championships, they make 100% plus on their portfolio. So those are amazing results. This is more like a reasonable kind of a trading return. I I split my capital into two buckets, both the investment and trading. I started with only 10% in the trading bucket because I was not very confident of my trading. I do not want to lose a lot of money. Now, with time, I've developed more confidence. So now it's quite relaxing. I know I'll make money. So even months on end, if I don't make money, it's not a big issue. I know that the market will turn and will give me opportunities to make returns. So my life nowadays is actually much more relaxed. I hardly look at the computer screen. I see it once in the morning when it starts, once at the end, and sometimes in between. Most of my work happens during the evenings, 1 or 2 hours, which I just go over the charts and see the results and see whether then some more stock has to be added to my watch list. My trading also uses a mix of technicals, momentum strategies, and some fundamentals also. The objective is that as I mentioned, the new young traders could learn from the experience. Not necessarily just because they learn from the experience they can make money, but hopefully it will make them slightly better traders. So as I had mentioned earlier, the caveat is that trading is not something which is suited for most people. 95% of the people lose money in trading. Even within trading, there are different methodologies. You have momentum trading. You have some people do long-term trading, long-term trend trading, where you buy stocks only above the 200-day moving average and you hold on as long as the 200-day moving average is not violated. So that is very long term. Sometimes they hold positions for 4 years, 5 years, 7 years, depending upon how the markets are. And then there are intraday traders, people who trade only within one particular day. So by the end of the day, they have closed their positions and gone. So my trading style is more of position trading, which the holding periods could be between 1 month. If the stock is doing well, I could even hold for 6 months, 9 months. So I don't intend to be a long-term trader, but it's in between. That's the you call it position trading. Now these are some of the difficulties you will face on the way. This is a very tough business. I mean, don't let anyone tell you it's easy. I've seen many people who come into the business thinking, it's so easy to make money. It never is easy to make money in any business. And in a business as competitive as that, it will not be that easy. You need a process. The process, a good process comes from experience, and experience comes from losses, as people say. So it takes time. I have had periods of 3 year losses twice in my career. And generally, these the losses happens when you are in the most vulnerable position. So the first 3 year phase happened right from year two to year four of my trading career. That's not the time you want to have losses, but that is the way it was. So the only thing is because I was positive and I thought I could improve over time that I held on. So people who want fast gains, in my experience, they will not get it. Another very important point, actually, the most important point is it's to be wealthy. You need to invest or trade a significant part of your capital. So if you have a net capital of 1 crore, if you're going to invest say 10,000 rupees in 10 stocks, it doesn't really matter. That portfolio will not impact your lifestyle in any way. It will not make you wealthy. You need to have at least 20-30% of your net worth involved in trading or investing. That's a big part. And once such a large part is involved, then your game changes in some way. You become more risk averse. You want higher, better quality companies. All these things happen. Just trading 10,000 rupees here and there, jumping around, will give you excitement, but will not make you wealthy. Another very important thing, which people don't tell you, is that you require capital to make money. I've just given a hypothetical example here. Suppose you make 6 times your money in 10 years. It should not be difficult. In that case, over a 30-year period, 6 into 6 into 6 becomes 216 times. That is any capital of yours, if it grows at this level, in a very slow, conservative way, can go up 216 times. So now, if your objective is that at the end of 30 years, I need some 20 crores of capital to live a nice life, then you need to at least invest 9 lakhs now. So the capital has to be there. If you don't have capital, it's going to be a problem. Also, because you will see a lot of years of pain, you need patient capital. You can't have desperate, can't lose capital or capital that has been borrowed. With that, you cannot play such a game where persistence is required. Also, when you're starting out your trading career, it's better that you keep money aside for emergencies. You cannot take out money from your trading capital whenever there's an emergency. Keep money aside for emergency. And for your monthly expenses, you need capital. You don't want to take it out of your trading capital. So keep enough money in a bank account probably where you will get monthly interest income to meet your household expenses. And it's even better if your wife is housewife. That money should go directly into her account. It's not good that she keeps asking you every now and then for money. It's very demeaning to a person to ask for money from anyone, even from a husband. So let the money go directly into a bank account. Okay. What are the resources you will need besides a laptop, good internet connection? You need to know certain things, and you need to have read certain books. So some of the books I have listed down here, these are very good books. See, technical analysis of stock trends gives you basics of technical analysis, and then the next three are my main. These are the main books which I have referred, which I on based on which I have come up with my trading methodology. They use something called the Canceller model, and all of them are more or less the same lines. And based on that, I came with my methodology. So that's the books which I have put down here. Finally, you have to develop your own trading process, which will take time. The trading process will involve what you will buy, when you will buy, at what level will you add to your positions, when will you cut your stocks. Still, as I said, these are the usual caveats, and there will be periods of pain. You need to have a deep passion, otherwise, in the during the periods of pain, um, you will walk away. And trading is not for everyone. For a lot of people, trading, the continuous monitoring, moving in and out, is not something they enjoy. Like one of my friends told me that he does not want to be a trading junkie. So most people don't like that. They prefer an investment style. For them, I have put across my investment methodology. This will come after the slide. So here it is. Before that, I want to tell you how I developed this methodology. When I started, I used to invest in mid cap companies because generally we have been told mid cap companies grow faster, they will make you much more returns. Then my friend told me that I was trying to waste my time doing trying to unearth all these hidden gems, which are the mid cap companies, which no one has discovered, and you suddenly discover them, and then they go up in price. He said these things don't happen. So he gave me his example. He had a seven stock portfolio, and during the 2003 2010 period, which included that incredibly brutal bear market of 2009, his portfolio went up seven times in that period. 7 years, seven times. And his stocks included the good companies like very high quality companies like HDFC Bank, TCS, Infosys, Emphasis, Tata Steel. So that was a revelation for me. There's no point in trying to unearth all these unknown mid-cap companies when these well-known large companies are anyway around. So the current investment methodology is to buy the best and leading companies. So, I mean, example, anyone knows them. These are companies which everyone knows, like HDFC Kotak Bank from banking, in FMCG Asian Paints, TCS Infosys from the tech side. So it's these are companies which anyone knows. And you don't need too many companies. You just need, say, 10 companies in your portfolio. No point in having a zoo of 100 companies or 50 companies. Have 10 great companies. They will give you 15% per annum over a 10-year period without you having to undergo any kind of stress. You don't need to research them. You don't need to worry about them. And they will give 15% return. People who think 15% is not great, let me tell you, 15% in 10 years is four times your money. Good return. And if you want to improve your returns, there's another way is to make a list of these companies and buy them whenever the markets have a very severe correction. Markets have serious, severe corrections almost every 2 or 3 years. Once that happens, you load up on these particular stocks. That can improve your returns to 18 to 20%. Then 18 to 20%, such a great portfolio is of stocks is a wonderful return. You don't need to do anything at all. Why do you want to keep trying to unearth the hidden gems? What people say, activity without productivity. I mean, because they may not even make you returns. I know another friend of mine who came to me 3 4 years back. He had invested in 1.5 crores in a portfolio in 2006, and when he came to me in 2018, the portfolio was down about 10%, 1.35 crores. And he had stocks like GMR, Suzlon, the same kind of things, which were the stars in the star mid caps in 2006 and 7. They have been in the dumps since then. So, how have my investment methodology been? What kind of performance have they given? They have given about 18% return despite lot of mistakes, because I have not really followed the methodology of investing only in good high quality companies. I lost a lot of money in speculative companies like GMR, Landco. In fact, I lost 70 to 80% of the investments in those stocks. Then some of the companies did not really provide great returns. However, despite that, it's 18% is not a bad return. It's a very decent return. So I have now changed my portfolio completely. I've added some companies, removed some companies. My current portfolio consists of, I think, pretty good companies: HDFC, AMC, Kotak, HDFC Bank, Linde, MCX. They're all great companies. I also have some speculative ones: the Neuron Lab, Lotus Lab, India Infoline, Idea Vodafone. Yeah. So now that ends the first part of uh, this video series on momentum trading. In this, I only covered some basic. I have not really gone into momentum trading. That will happen in the part two, where I will again start with some basic technical analysis. So thank you and see you again there. If you like the video, please click on like. Thank you.